Good day, everyone. Today is November 18th, 2025, and this is part number one. Part number one, we discussed the general view of the markets, gold and equity markets, U.S. equities, and we shed the light on the future or near future outlook for those markets. As usual, we start with gold. You can see here the daily chart of, this is NASDAQ. We start with gold. This is the daily chart of gold. Each bar is, or one candle is 1 day. The yellow is the 50-day exponential moving average. The white is the 100-day exponential moving average. This constitutes the support channel. It starts right now at 39.30 down to 37.63 or so. Now, last time we rose into the resistance channel that we have been talking about for a while. It happened to be around the middle of this huge down day. The huge down day from October 21st last month. That was a huge down day. The midpoint of that candle is 42.27. So we rallied to it, slightly above it, and then we proceeded to drop precipitously. And here we are. Now what? Clearly, most likely, we're headed into the support channel, which begins at 39.30. Now, given the fact that channel now is above the last low that we reached on the 28th of October, after the big drop, we settled at around 38.86. Given the fact, again, that this channel begins higher, I'd like to go with that number, close to 38.86. So let's call it 3900 is where we start buying if we want to buy. And keep in mind, it could go all the way down to 37.63. So you got 130 points or so from 3900 to 3763 potential. So when you enter into a position, ask yourself, can you handle this drop? Do you have sufficient capital? Are you mentally and psychologically prepared to handle potential drop? We'd like it to go up. What if it doesn't? What if it lingers in here? Do you really want to close your position here? Do you really want to do that? No, especially if it's a swing trade. We're willing to wait days or weeks. So the first thing is be ready to withstand drops in here. So make sure that your position size is appropriate for a potential drop. Put it under what is so-called a stress test. Can you handle the stress test? That's the question. If you pass, if yes, you should be okay. So that's for the gold. We still believe it's headed into this channel here. We've been saying that for a while. We will close the short when we hit the yellow, but we'll only go long below 3,900. XAU moves within 85 points a day. That's the average move from high to low based on the last 9 days. That's an average range. Let's take a quick look at the NASDAQ here. Similar, but it's already into the channel. Okay, bullish overall, but it's within the channel. So it had dropped. It's been touching the 50-day exponential moving average almost every other day lately. So that's too much. First time we hit it was October 10th. First time in the last couple of months, that is. We bounced off of it very nicely, made a new high, came back, bounced off again, hit it. We keep bouncing off of it, but we keep trying to go lower. So the odds are that we end up going to the lower of this channel, which is the 100-day exponential moving average at around 24,170 or so. I like that because it also gives you the low from the 10th of October, which was 24,000. So the area close to 24,000, 24,200 is now a huge support area. We're already long, but we're not long big. We're ready to withstand drops down to 24 if we have to, where we will add. This is a swing trade, a trade that can stay with us days or weeks if we have to. We still believe the last period, the last month or 5 weeks of this year will be somewhat bullish. I would not be surprised we head back to the highs of the year and close near the highs. Okay, so that's what I have. NASDAQ moves within 518 points a day based on the last 9 days. That's the average move. S&P, 87 points. There will be no part number 2 today due to travel. So I wish everyone the best of luck and thank you.